So let us understand profitability for value creation, performance evaluation, risk management, decision making, and strategy formulation. So in any business, the first thing when we look at the profit and loss statement is sales. Now this sales is also known as top line. It is also known as top line. And why it is known as top line? No rocket science. It is known as a top line, and that is because sales, sales is the first line or is the line on the top of the profitability statement. That is why sales is also known as top line. Are you able to see my Excel sheet on your screen?
Yes, sir, we can see.
Okay, very good, very good. Right. So let's say the company that we are talking about, this company has a sales of 1000 rupees. So I'm just keeping the numbers. I could make them millions and billions, but I make them millions and billions. Every time I say million, we use 3 seconds. So we have to manage the time and save the time. So I'm just going to say rupees 1000. Now, which is the first cost that we incur in a business? And I'm sure we all know the first cost that we incur in any business. And of course, this example that I'm discussing with you is from the perspective of a manufacturing company. But remember, even for a trading company or for a service company, the same example or the same case study is going to be applicable with minor changes that I will share with you in any case. So the first cost that we incur in a business is known as the material cost. So let's say we have a material cost of 300 rupees. Now, what do? So we have a material. Now we need to convert this material into finished product. So for converting this material into finished product, we incur the second cost in the business, and that is your manufacturing expenses. That is your manufacturing expenses. Now this manufacturing expenses, friends, is also known as conversion cost. Conversion cost, and I'm sure you can understand why manufacturing expenses are also known as conversion cost. That is because manufacturing expenses are incurred for converting the raw material into finished product, and that is why manufacturing expenses are also known as conversion cost. So if you say conversion cost or you say manufacturing expenses, both mean the same thing. So let's say this company, the case study that we are discussing, has got a conversion cost of 100 rupees. Now, when I deduct from the sales the raw material cost and also the conversion cost or the manufacturing expenses, what do I get in my hand is known as gross profit. What it is known as? It is known as gross profit. Gross profit. Now remember, friends, this gross profit is also known as by some people as gross margin. Some people call it as gross margin. Some people call it as gross profit margin. Some people call it as gross value addition. Some people call it as gross, some people call it as simply value addition. Some people call it as gross contribution. Or some people simply call it as contribution. Okay, so I may make some mistake in the spelling. Don't think that I'm so bad in my English, but just in a hurry. Right, so this is how you get your gross profit. So what are we saying? We are saying from the sales, when you deduct the material cost and the manufacturing expenses, what you get in your hand is your gross profit. Now please also remember, this material cost and the manufacturing expenses put together is also known as by another name, and that is known as COGS. And what is COGS? COGS is cost of goods sold. So you take the material cost and the manufacturing expenses, add them together. So material cost and the manufacturing cost, you add them together and what you get is known as gross cost of goods sold. Effectively what we are saying, from your sales you minus your COGS, what you get is your gross profit. Right. So now what you do, if I can ask you, what is the next cost that we incur in any business? Would somebody like to tell me? What is the next cost after incurring the material cost?
Salary.
Labor, salary.
Salary, labor. Okay.
Marketing costs.
Marketing
Marketing costs.
Distribution costs.
Very good.
And I have a small doubt here. If we say salaries, won't they go in the manufacturing cost?
Very good.
If the labor is on the shop floor or something?
Yes, Tarangji, it's a very good question. Very good question. And all of you, please pay attention. Remember, when it comes to salary, salary can be paid to two kinds of people. Which are these two kinds of people? Number one, we pay salary to the people who are working in the manufacturing of the products. And we pay salary to the people who are working in the administration or marketing of the products. So that means what? That means salary that you pay to the people who are engaged in the manufacturing will be part of your manufacturing cost. And the salary that you pay to the people who are engaged into the administration and the marketing of the company, that salary will be part of your SG&A, and that is your selling, general and administrative expenses. I hope that answers your question, Tarangji.
Yes, sir, it does.
Okay, very good. Very good. So now, let's say, what is selling, general and administrative expenses? Any business, and all of us are from the corporate, so we know it. And in any case, the expenses that you incur on the administration of the company, on the marketing of the company, distribution of the products of the company, selling of the products of the company, and the other procurement function and the other function. So all those legal functions, traveling, communication, audit, and so on and so forth, all that is part of your SG&A, selling, general and administrative expenses. Now what we do, let's say in our case, the SG&A is 100, and the difference between the gross profit minus the SG&A, what we get is 500. This 500 is known as EBITDA. EBITDA is earning before interest, tax, depreciation and amortization. Now, as an independent director, as I was mentioning a little while ago, EBITDA has got significance from three perspectives. Number one,
Before going to that,
yes,
since
please.
I'm not from a very finance background, just
Mm.
for my understanding,
Mhm.
why is this SG&A not considered gross profit? See, at home, if we have something, so if we have 100 rupees and our cost is 50 rupees, so we directly do that and do it, right? So why is this 5 not considered after 2, 3 in the gross profit? Is there any particular reason that we don't consider it before?
यस दीप्ति जी, बहुत बढ़िया सवाल है, बहुत ही बढ़िया सवाल है. Remember, the purpose of profitability is to take decisions, and when you have to take decision, you have to break the entire operations of the company in as many components as possible. So if I was to include SG&A also here, then what will happen? You will straight away get the figure of EBITDA. And that means what? That means you will not be able to figure out as to what is the contribution of the material cost into my EBITDA, what is the contribution of the manufacturing cost in my EBITDA, and what is the contribution of SG&A cost in my EBITDA. So as an independent director, as a company, as the top management, you would always like to break the operations in as minute components as possible. And that is the reason you first take the material cost, because that is the first cost that you incur. Then you take the manufacturing cost, because that is the next cost that you incur. and then you take the SG&A, selling general and administrative expenses, because only after when the product is ready, then you will talk in terms of selling it actually. So that is the reason as to why SG&A is not combined with the gross profit and it is taken separately so as to get the figure of EBITDA. I hope that answers your doubt.
Just to rephrase, is it because it is going to be distributed among many years of it, and this is not the I mean, it does not depend on the market. It depends more from a perspective that in my admin, in my day-to-day stuff, it is kind of a OPEX, I will say.
Yes, this is OPEX.
So GST is also linked to the manufacturing cost, not to the salaries actually.
Say it again, please.
GST,
Yeah.
when it comes into picture,
Yeah.
Manufacturing cost, GST comes into picture, but for the selling and the salaries, GST doesn't come into picture.
Right. Okay. That's a good point. That's a good point. But let me tell you at this point in time, without getting into the technicalities, see, GST is something that you pay and that you take credit of it actually. Because when you purchase the raw material, you pay the GST. When you sell the goods, you collect the GST. And the GST that you collect, you pay to the government after taking the credit of the GST that you pay to the vendor. So that is another thing that you must keep in mind without making it so technical. Okay, so can we move forward now?
Yeah.
Okay, good.
Deepti, you have to clarify yourself. Let's have to be clarified. Deepti.
Yes, Deepti, please go ahead.
I understood. We can move forward.
Okay, good, very good.
So just one other quick question.
Yes, please.
Any capital investment, like let's say from a manufacturing standpoint, you invest in some machinery that doesn't come into the manufacturing expenses, right?
Excellent, absolutely excellent question. Now, all of you, please remember and just note it. We have a balance sheet and we have a P&L. So what will come in P&L and what will come in balance sheet, let us understand, because this is a very good question and I'm sure this will clarify doubts of everyone. In P&L, you have only the items of income and expenses coming in. P&L will have the items of income and expenses. In the balance sheet, you will have the assets and the liabilities coming in. So when you say, Roja ji, जब आप कहते हैं capital expenditure, when you are incurring, you are creating an asset. And when you are creating an asset, that asset will go into the balance sheet and not in the P&L. I hope that answers your question.
Sure, got it.
Okay, good, very good. Okay.
Question. I mean, this we are looking at manufacturing costs. But
Yes.
what happens when we have to do this for, let's say, a services company or even a software IT company?
Right, very good question. So let's look at now what will happen in case of an IT company or in case of a service company. You will not have a material cost, but you will have many.
Sir, I had a related question too. Sorry, sir.
Okay, I'll just finish the first one and then
Sir,
we'll come.
I had a related question so that you can answer in the same book.
Please go ahead.
Sir, you can answer in the same book. If you can also do it for a e-com company at the same time, it will really help.
Very good. So